And hello traders, and welcome to another video. So in this video we are going to talk about hybrid strategy. Okay, so I'm gonna show you guys a couple of examples that I draw here for you guys, and also in the charts. We're gonna talk about some aspects of hybrid strategy, all about it, entries, exits, all kinds of stuff. So this video is going to be a little introduction in hybrid strategy, and we're going to talk about it in general. But again, throughout the course, you're going to find more videos about certain topics that I mentioned here. So yeah, let's start. Let's start going with this video. So as you guys can see in front of me, I have an example where and how do we get involved basically in entries with the hybrid system. So basically, as you guys know, we are focusing a lot on price action. So yeah, price action is really our indication on whatever we are gonna enter the trade or not. But again, we have fixed rules in place that we always need to follow. So we are not using multiple time frames, for example, to have our analysis or to build confidence. Why? Because again, guys, if you want to make your trading easier, and if you want to trade based on probabilities, multiple time frames are not a good idea. Again, I do not say that they are bad. Okay, you can still go and look at every time frame possible. Start your top-down analysis. Start with monthly, weekly, daily. And just build your confidence before you enter a trade. You can do that, okay? But I'm going to explain right now the reason why I think that is not the greatest idea. Okay, so in a lot of other communities, and a lot of other mentors, are speaking about it, and they are all saying that building that more confidence, looking at multiple time frames is a good thing, because you're gonna have more bias, etc., etc. But I do not agree with that. Okay, I think that Forex and trading is a game of probabilities, and it will be 10 times easier to trade if we focus solely on that. Okay, so what happens, guys, when you trade on multiple time frames is that, for example, you're gonna look at the weekly time frame, and weekly time frame is gonna show you that price action is bullish, and all of a sudden you're gonna have a bullish bias. Then you're gonna drop on daily, and daily time frame is gonna tell you that is bearish. And then you're gonna go to 4-hour time frame. 4-hour time frame is gonna say bullish, and then you're gonna go lower on 1-hour time frame, and 1-hour time frame is gonna say bearish. And then all of a sudden, all those decisions are placed in front of you. And again, guys, you need to understand that we are humans. Okay, so as we are humans, we are emotional beings. Okay, so we are emotional human beings. We think when trading, because again, sorry, I need to explain to you something else. So trading, and when we trade, we have emotions. Why? Because trading is not like any other business out there. You need to understand that. This is why trading is hard. Okay, so for example, you have 95% of people who are trading are losing money. They're not making money. This is the hard business. We can all agree on that. Yeah, you can make it simple. You can do all of these things. For some people, if you have a right education and you have everything that you need, it's gonna be easy. Okay, but again, it's the hard business. It's hard business. You can do a lot of other businesses that are a lot easier than trading Forex. And why is Forex that hard? Is because we are basically trying to make money with our money. Okay, so for example, we put in $1,000 and we risk our money. So we risk our money to make more money. For example, $4,000, $5,000, etc., etc. So how businesses normally work in the world is that, for example, you buy a pack of gums for $2, and you have that pack of gums in your inventory, and it doesn't mean that you need to sell it right away. So sometimes it's gonna happen that you can sell it right away for a profit of, let's say, $4, and you bank a profit of $2. So you bought it for $2, you sold it for $4, your profit is $2. Boom, you made profits. But what happens is that even if you do not sell that right away, that asset is still going to be there. So you're not risking it. You are going to sell it eventually. It doesn't matter if you're going to sell it today, tomorrow, in 1 month, but you have an asset. In the worst case scenario, maybe you can sell that asset for the same amount that you bought it. So, even though you do not make profits, you can sell it for break even, so you can sell it again for $2. So this is how mainly every business in the world functions. So you do not have a lot of risks, okay? But with trading, you are basically risking your own money to make more money. And this is why trading is emotional game. And we cannot hide the fact, guys, that we are humans and we have emotions, okay? And this is why when you trade, those emotions are present, because again, you're risking your money to make more money. And believe me, guys, as you build your capital, as you build your funds, it will get, even those emotions are gonna get bigger and bigger. So for example, when you're trading in a demo account, you do not have emotions. Okay, so when you're trading on $1,000 account, it's still $1,000 account. It's nothing, really serious. And then you start trading a bigger capital, you go for 100K capital. Those are emotions, those are bigger. It doesn't need to be like that. It should not be like that, but we as humans think like that. For example, I'm gonna give you an example how prop firms functioned, 10 years back. 10 years ago, we didn't had FTMO, we didn't had MyForex funds, and we didn't had those evaluation processes. It's not how prop firm trading was really conducting business, okay? So before, if you wanted to trade with prop firms money, you would need to show statistics for at least 2 years of profitability, okay? So you would need to trade your own funds for at least 2 years, and you would need to have, the statistics and the data to show and prove to prop firm that you are a legit trader who is making money, okay? And this is how, prop firm trading was functioning back in the days, maybe 10 years back or something like that. Right now, everything has changed, prop firm trading, there are still, prop firms that function like that, but it's mainly a new method right now. Evaluation processes, you pass a challenge verification, then you get, funded capital. But again, earlier, the prop firm industry didn't function like that, okay? So what happened is that the traders who are showing profitability for 2-3 years, all of a sudden had a bigger capital to play with. So let's say, for example, the trader was trading with $10,000 of his own funds. He was profitable for 2 consecutive years, showing results, banking profits, everything was good. And then all of a sudden, he came along to trade with the prop firm's money. The prop firm give him bigger capital to trade with, and all of a sudden, the same person that has shown the results for 2 consecutive years is right now losing. And why is he losing? Because on a bigger capital, the emotions are also bigger, okay? Because right now with 1% trade, you're risking maybe your whole account, that you have traded with. So those emotions are bigger, the stronger. We feel them more. So for example, you're gonna trade 200K capital, you're gonna risk 1% per trade, it's gonna be $2,000 in a stop loss. If trade goes 10%, it's 20K. 20K, you're gonna feel scared. You're gonna feel emotions. You want to close to get out of the trade. That's the completely wrong mindset. This is why traders lose, because when they lose, they lose big. And when they win small because they're scared and they just want to close their trade and exit the trade and bank their profits. But it's a completely wrong mindset, and this is why majority of people are losing. Again, guys, everything in this business is about emotions, okay? And this is why I do not agree that trading on multiple time frames is a good idea for traders. It's not. For me, it is not. Why? Because you're gonna have a lot of decisions, and we as a human beings, we cannot make a lot of decisions, and those decisions, because we are risking our money to make more money, are gonna be emotional. So believe me, I work with traders, a lot of traders. When people are looking at the charts, they see what they want to see, not what price action is doing and telling them. So all of a sudden they're gonna feel fear of missing out. They wanna get involved in trade. They see everything is high probability. They wanna get boom, involved. And what's gonna happen is that their brain is gonna scan the chart and is gonna see only positive things about the trades. And they are gonna completely ignore the negative ones. And then after they take a stop loss, after they review, hopefully they review their trades, they're gonna see those things. But how you didn't spot those things then when you were trading? Why? Because you were trading based on emotions. And this is why I think when you're trading on multiple time frames, it's gonna be harder, really, really harder. Because again, factor of luck is gonna be more present. That's for sure, because you're not trading on probabilities. Your strategy is not robotized. Your strategy is not systematic if you're trading on multiple time frames. So everyone can say what they want, but that's a fact. Okay, factor of luck is gonna be more present in your trading, and you're gonna have a bias. And I do not like to have a bias. I want to trade based on probabilities. Okay, so I want to react to price and do the things accordingly. What price action is telling me, not have a bias, bullish or bearish, etc., etc. I don't like that. I want to react to the price. So basically, this is why I do not think that that's the most smartest idea, to trade on multiple time frames, because it's easier for traders to solely focus on 1 or 2 time frames, on one or just a small bit of pairs, master those pairs, and be professionals with those pairs and not trade all of the pairs, etc., etc. But yeah, that's pretty much it. Again, you can watch it, you can build extra confidence looking at multiple time frames, but I think that for you as a trader is gonna be really, really easier if you focus only in 1 hour time frame. You start to backtest the 1 hour time frame. You start to backtest the strategy. You're gonna see the strategy is profitable. You do not need to believe me. You do not need to take my word. Go and backtest the strategy. You are going to see that the strategy is profitable. Okay, and then you're gonna start backtesting. For example, your USD. You're gonna start backtesting it. Then you're gonna do your ASR. So you're gonna do your advanced self-review. You're gonna review all the trades. You're gonna make your trade plan. You're gonna make your trade plan. You're gonna make your checklist. And then with that same trade plan and same checklist, you're gonna go and backtest the same pair, the same years for a second time. But right now with the backtesting data that you had and the trade plan that you have created, you're gonna build confidence in your trading, confidence in the strategy that you're trading. A big problem that traders also have is they have that shiny object syndrome. All of a sudden there comes bad period. There are bad periods in the market. For trader, your job as a trader is not to make every single month profits. This is why if you want to be a trader and if you want to only to do this, you need to have at least 1 full year of money saved up for your expenses, for your bills, for everything before you start being only trader. Okay, because you cannot expect to extract the money from the market every single month. It doesn't work like that. Sometimes you're gonna have bad periods, and on those bad periods, when those bad periods arrive, people tend to change strategies, to switch strategies. Why? Because they do not have confidence in their strategy. And this is how they are never going to have consistency, because they are not consistent with one system for long enough periods of time to really show the profits, to show those results. So again, guys, when you start backtesting strategy, you're going to be confident in the strategy you're trading. You're going to see that strategy is profitable, and this is how you're going to really have a higher success, of trading successfully. So basically, if you're trading on multiple time frames, again, the backtesting data is not going to be correct as well. it's gonna be a little bit, you know, tricky. And this is why if you focus only one time frame, you can backtest everything, you can see the history, you can have the right data, you can have the right statistics, you're gonna know what works and what doesn't work, you're gonna get to know the pairs. So we trade basically as 6 pairs. So all of the 6 pairs, you're gonna do at least 3 years of data. First time when you backtest it, and second time you're gonna, after you have you know, done your ASR, create your training plan, etc., then you're gonna basically backtest the same year, the same pair again. Do you know how much? Then you're gonna do naked charting on the pair, you're gonna do all of those things, you know, combined, and you are going to know the pair that you're trading. It's gonna help you tremendously. And you're gonna be focused again, guys, on probabilities. You're gonna focus on probabilities. So you're gonna know you have your setup. Okay, it's the exact same setup every time that you're trading. You're not trading Confluences and trading all of those setups and this and that and this and that. No, you are trading what you know that works based on your work that you have done. You have seen it with your eyes, you know, and you're gonna trade on probabilities. So 10 times you're gonna trade EURUSD, you're gonna take the same setup 10 times. You're gonna know 6 times the trade is gonna fail. Even though if it fails 6 times, you're gonna have four winners. But those 4 winners are gonna have big risk reward trades and you're gonna make money. So this is how you're gonna not gamble and not, you know, try to guess the direction, try to guess the market, predict something, blah 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 blah. No, you're gonna focus solely on probabilities, and you're gonna execute your pattern over and over and over again, and you're gonna know that that pattern works. Okay, because you have done your job. You know, you have backtested everything. You know that it works. So again, trading is a long-term game and you need to focus on probabilities, and this is why we focus only on one time frame, and that's 1 hour time frame. So again, guys, hybrid strategy can be executed on 1 hour time frame, and if you're a beginner, I really do recommend you to focus only on 1 hour time frame. So hybrid strategy can be executed as well on 1 minute time frame. So we are executing our trades only on 1 minute and 1 hour time frame. If you're a beginner and if you're starting out, I would recommend to stay away from lower time frames. Why? Because they are risky. Everything is happening too fast. Okay, you can get caught really quick. You can destroy your capital like that easily. You don't have enough to think. You do not have enough time to think. You know, everything happens too fast. You don't have time to check your checklist, you know, to check your emotions are in place, etc., etc. And with 1 minute, there's a lot of stress, you know. So if you are a beginner trader and if you do not have enough experience for now, I would recommend only to focus on 1 hour time frame. Okay. So hybrid strategy can be executed on 2 time frames. So 1 hour time frame, and those trades in 1 hour time frame can sometimes be, you know, basically day trades. You know, they're gonna last maybe a couple of hours, or because we have a trade management system, we don't use take profits. Sometimes this can even be a swing trade. You know, maybe if the trade goes like 3-4 days or something, but those are gonna be really big profits. So 1 hour time frame, you can execute it, and I really advise everyone who is just starting out and doesn't have a lot of experience to focus only on 1 hour time frame. It's really better. So our strategy can be executed on 1 hour time frame and can be executed on 1 minute time frame. Okay, so as well you can execute our strategy on 1 minute time frame. But if you're not experienced, I would really suggest not to look at 1 minute. With 1 minute, you can have really big risk reward trades. You're gonna see how we manage the trade when we take it on 1 minute. It's really crazy. You can have really big risk reward trades. But again, if you're not well experienced, for now, I would really stay away from it. So again, guys, this is how we're executing our strategy. So purely on 1 hour time frame and on 1 minute time frame. And again, you can look at higher time frames, you can watch higher time frames, but I think that it's better to start back testing, do pair characteristics, focus on 1 time frame, and just trade probabilities. get to know the pair, get to know the time frame, get to know what price action loves to do on that pair, how the price action is moving, what the pair likes to do, what's happening. You're gonna get to know the pair, you're gonna know everything about the pair and that time frame that you have focused on. Believe me, your success is going to be tremendously expanding when you're focusing only on that and not, you know, looking at multiple time frames, multiple pairs that you do not even know what they're doing and what they like, etc., etc. So again, this is really to make your trading easier. Okay, so okay guys, we have two execution criteria, so we have two execution methods. Okay, the first one you're gonna see, for example, starting from left, we have this ascending price action. Price action is breaking highs and retracing, showing us there is no momentum in the market. Let's say we are reacting to the supply zone. We use this supply zone reaction. We have this change of character and price is making this continuation impulse, correction impulse. So you have right now two choices. Okay, so either you're executing your trades based on momentum order block, or you're executing trades based on double confirmation order block. Okay, so this momentum order block is called normally usual hybrid entry, high probability hybrid entry, and this is called double confirmation entry. Okay, so this is the two execution methods that we have in hybrid. Okay, so in order to execute this pattern, we have certain rules in place. Okay, so first rule is that this momentum and this momentum here need to not have any retraces in them. Okay, so this momentum needs to be clean in order for you to execute high probability order block. The second thing that is fixed rule is that this low needs to not get broken again. Okay, so those are the fixed rules for strategy in order to trade it successfully. So you're gonna have a standing price action, you're gonna have a breakout to the downside. In order to trade right now the reversal here, first thing, this momentum needs to be clean with no retraces in momentum. Okay, that's the first thing. Second thing, price action needs to come back to the order block and not break this low. So if price action starts and break this low, this trade is not valid anymore. And this is how you're gonna be able to trade based on probabilities. And this is how you're gonna ignore endless order blocks that you see on the charts, because you're not interested in them. You do not care about them. You have your entry criteria. You know what you need to look and see in order to trade. Okay, so if this impulse has any retraces in it, you do not trade it. If price action has broke the low, you do not trade it. You do not care about it. You move on to the next one. It's not in your trade plan. It's not your entry criteria. Next. You do not care. And this is how you're not gonna trade based on 5,000 order blocks. So you're gonna have the standing price action. You're gonna have order block here, order block here, order block here. You're gonna have endless order blocks. Price is gonna go in this descending price action. Is gonna move in ascending. You're gonna trade based off here, 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 here. Wrong. You're not going to do that. You know where is your execution order block. All other order blocks you're using only for reaction, like this one. So if you have like descending price action, and let's say price action is coming back, here this order block is not your execution order block. This is used only as a reaction order block. So what you're going to do is you're going to wait for reaction, break a structure, change of character, and then you're gonna trade, but only if this momentum doesn't have any retraces and we didn't took the low. Okay, so these are our entry criteria that we need to see in order to trade. Later on, we have refined the strategy a little bit, and we have implemented double confirmation order block also in the strategy. In order to trade double confirmation entry, again, you are going to have the rules. Okay, so first rule is, again, this bit of price action doesn't needs to not have any retraces in it. So impulse needs to be clean. This retrace And this next impulse, again, it needs to not have any retraces in it. This low needs to not be broken more than once, and this as well. So if, for example, you had this ascending price action and then impulse to downside and then retrace here, and then you broke the low and done this, and to trade here, this is not valid. So all of a sudden, this is not valid. You're not this is not double confirmation entry. Okay, why? Because you have broken the low once, you have broken the low twice. So again, this impulse needs to not have any retraces. We cannot break this low here. This impulse doesn't and it needs to not have any retraces, and we cannot break this low. So those are the rules in order to trade. Oops, sorry guys. In order to trade a double confirmation entry. Okay, so I had an example here. Now it was ready to show you something. Okay, misclicked. Never mind. So again, guys, those are the rules that you're gonna follow always. So if your entry criteria is not met, you are not gonna trade it. And again, everything is gonna be more explained as you go on. So where is this? Yeah, so I draw the momentum here, I draw the impulse, and I'm gonna show you guys how we are doing things. How we are looking at most recent highs and most recent lows, and how we are looking at order blocks as well. So for example, let's focus on the price action on the left. So you're gonna have an impulse to the upside. Okay, so you're gonna have impulse to the upside. You're gonna have a retrace. So you see that this candle low didn't broke this candle high, and this is why this is a retrace. Okay, next candle broke that high, and here we can mark this as a break of structure. So this was a break of structure, and this was a momentum. Okay, so this was a momentum zone. Boom, price continued to the upside. So this first order block here is our normal hybrid entry. Okay, so we moved to the upside, we didn't have any retraces in the momentum, and all of a sudden we had a retrace. So we had a retrace. So this is considered as a pullback, a retrace. And then after that retrace, we continued to push higher. So we broke this high. This is considered momentum, impulse, correction, impulse. We didn't have any retraces in this momentum here. We had a retrace, and we didn't have any retraces in this momentum here. So this is impulse, correction, impulse. This is where we mark our order block. So this is where we mark our order block and where we want to get involved in that order block. So if price action right now came back to this zone, this would be a valid entry to trade from. Okay, so what happens when price starts to retrace again? So you're gonna see that price action after this momentum, this bit of momentum here, made another retrace candle. Okay, and after that retrace candle, it was an inside bar candle, as you guys can see. And this whole candle is swallowed by the previous one. This is called the inside bar candle. So also when you're looking at order blocks, when you're marking order blocks, sorry, I didn't mark it correctly here, wait. So come on. So again, when you're marking order blocks, you're marking, look at this, you're marking this as an order block, and you're also marking these candles low here. But when you're using inside bars, you do not mark this candles low. Okay, so you're marking only the inside bar. That's a fixed example that we have on inside bars and how we use inside bar candle. So when we have inside bar candle, we do not mark these candles low. We are only marking the candles low, the inside bar. And when the candle is normal, not an inside bar, as you guys can see, this candle doesn't swallow the whole candle. So this is not an inside bar candle. Then we mark a order block normally, and we mark the low. So again, back to the order blocks and these retraces. So we had a retrace. Okay, it was inside bar candle, and again price broke above. Okay, so right now we are looking at let me do this. So right now we're looking at these two zones. Okay, so prices was making an impulse, retrace, impulse, retrace, impulse. So this first order block here is momentum order block, high probability hybrid pattern. So this is considered as a first order block, valid order block. And right now with price, because as you guys can see, price didn't have any retraces in the momentum. Okay, every high was taken out by the previous high, and the rule is that we cannot break this high again. We cannot break this high. So price needs to retrace to this order block, came back to it, and then we're gonna have our high probability hybrid pattern form. This is the correct order block. This is our legit entry. Okay, and this is our double formation entry, because why? As you guys can see, we didn't have any retraces in the first momentum. We had only one retrace, and then a second impulse again didn't have any retraces, and we had a second retrace. And then again, this bit of price action didn't have any retraces. We didn't take the lows, we didn't take the highs. So you're gonna see that we have impulse, we have correction, we have impulse. So this is your first order block. And if price action continues here, you're gonna trade this as a normal order block. But if price action breaks again the high, this is gonna be your newly created order block. This is gonna be your double confirmation order block. So you can trade based off this, and you can trade based off this as well. Okay, but again, this bit of price action needs to not have any retraces in it, and this bit of price action doesn't. It needs to not have any retraces in it. This high and this high needs to be breaking only one time. If you break it multiple times, then this is not valid anymore. And I'm gonna show you right now. So you can take both ones because both are legit. But what happens when price action breaks again? Okay, so what happens when price again makes a retrace and breaks again? Right now, this is not double confirmation entry anymore. We are forgetting about this order block. Doesn't exist. And right now our new momentum or hybrid high probability entry order block is this one, and our new double confirmation entry is this one. Okay, and it happens all the time. So you're gonna have a retrace, it's gonna break the high, so you're gonna break the high. This right now is gonna be double confirmation order block, and this is gonna be your newly created order block, momentum or hybrid order block. Okay guys, so I know it's a little bit confusing, it's a little bit difficult, but that's only, I promise you, that's only at the beginning. As you start backtesting, as you start moving higher highs and lows, marking your order blocks, everything is just gonna click like this. Okay, so just give yourself the time, you know, you're gonna get it, you know, right away. And again, wait until we start backtesting a little bit together, you know, watching a couple of videos, finishing the course, everything's gonna be clean and clear for you. So again guys, if we had, for example, if we didn't have a retrace here, this would not be our order block. Okay, so this would mean that every high is taken out by the previous high, and right now if price action does this, oops, price action dot, wait, right now if this was higher, you know, if this was not a retrace candle like it is, this order block would not be correct. We would have only this order block. And what happens if this was not a rinse bar candle, and this was higher and this was lower, this was a retrace candle, then only valid zone would be here. Okay, so only valid zone would be here because this was high. So this is part of the momentum. We didn't have any retraces, so this is not our block because we didn't have a retrace. We didn't get that impulse, pause in momentum, and then boom, another continuation, so we can consider this zone. No, this was all the part of the same impulse. The price was just breaking the highs and showing us momentum to the upside. So only valid order block would be here. Okay, and right now if price action has done this, you know, and this was a part of momentum, and price action has done again a retrace and boom, continuation push up, and this would be our normal order block, and this will be our double confirmation under order block. Okay, so what happens if this was higher and this was higher? So right now our only order block, only valid order block here would be this one, because this is a retrace. This is when momentum came in the market. This was just part of momentum. Part of the momentum, you know, price was just pushing higher. There was no pause in momentum. There was no creation of the new order block. So this is how, you know, things, how we are doing things. We are eliminating basically a lot of order blocks, a lot of, you know, decision-making process out of our trading. We're only focusing on the rules, on the strategy rules, on the entry criteria. This is gonna help you tremendously, guys, with your emotions, with your discipline, with your patience, with, you know, trading on probabilities. Basically, you're gonna eliminate the factor of luck from your trading, because again, all of those things can be back tested. You're gonna back test. You're gonna know. You're gonna always have the same exact entry criteria, fixed rules in place that you're always going to need to follow. Okay, and this is how you're allowing yourselves to play on probabilities. Okay, so factor of luck will be eliminated from your trading. So even you're gonna have rules, you're gonna have your trade plan, you're gonna know, if I execute this exact same trade 10 times out of 10 times, I'm gonna lose 6 times, for example. I'm gonna veer 4 times, but again, when I win those 4 times, the risk reward is gonna be massive. I'm gonna be in profits. This is how you're gonna allow yourself to not gamble, to not guess, to not have a bias in the market, to eliminate all those emotions, to eliminate all those, you know, decisions from your trading, and to focus solely on probabilities and the things you have tested out for yourselves. You know, you have entry criteria, you have rules in place that you always need to follow, and you're just following that, you know, no matter what. Okay, so guys, both again, as I told you, both entries, or hybrid order block and double confirmation order block, can be executed on lower time frames as well. Okay, so what you're gonna do when you're trading lower time frames is you can execute it in 1 hour. Let's say, for example, on 1 hour time frame, order block is too big. Okay, and then that's when we execute on lower time frames. So basically, on the lower time frames, you're gonna look for confluences. So you're gonna see how price action is approaching this order block. Okay, so price action is coming to this order block, you know, and price action is doing this. You're gonna wait for descending price action. You're gonna see a breakout, and you're gonna want to trade this. Okay, so you're gonna want to trade this. You're gonna see I'm gonna talk in more videos about how we're executing. You're gonna see me executing on lower time frames and everything. So I'm gonna explain more how we execute and how we trade on lower time frames in the next couple of videos. But again, basically you can trade lower time frames both on this order block and this order block. And again, it's gonna help you because you do not need to sit on 6 hours long sessions every single day. Why? Because you're marking your 1 hour point of interest and you're just waiting for the price to come back to that area. So you don't have to be fixed on the screen for the whole day. If you want to trade on lower time frames, you can still do it. But again, you need to wait only when price action comes in this order block. When price action comes in this order block, yeah, then you must sit down and you must just watch what is gonna happen on lower time frames, because you know everything is boom fast on lower time frames. So everything can happen really fast. So as we execute in lower time frames, you're gonna have a descending price action breakout structure, let's say, for example, and let's say you're gonna have your order block here, you're gonna enter an order block. As soon as we break this high, we are setting our trade on break even. So we are managing our risk immediately, and we're managing our trade on 1 hour time frame. So you're gonna have two exit strategies. So one is you're setting your take profit on this high and you do not care. Why? Because again, guys, you're gonna see when you execute on lower time frame and when you manage on 1 hour time frame, those trades can really get big. So you're gonna sometimes have, if the price action breaks the high, you're gonna have like 50% trade. So it's massive. You know, you need to be a beast in order to, hold that trade for a long period of time when you're trading on funded capital. So this is why we have implemented, again, fixed rules. You're setting your take profit on the high and you do not care what happens next, or you're managing position, normally with, our system, our strategy in 1 hour time frame. So you have both, again, execution criteria, and you have a management criteria. Again, with execution, you're only allowed for 1 bullet. So if this trade fails, you do not trade no more in this zone. You have only right for 1 trade. So this is why you need to choose your trade carefully. You cannot take 2 losses in 1 zone. If you take a loss here in this zone, you trade the next one. So you're waiting for price action to break the high and then make something else. You do not trade here anymore. So if you take a loss, okay? So if price action comes back in this descending, breaks the structure and takes you out, you do not trade anymore. Wait, I drew it incorrectly. So you're gonna have descending price action, break the structure, you're gonna have stop loss. And then price action can do this and range here and do this. And do this maybe. You do not take it. Why? Because you took a stop loss here. So we have implemented this rule that you only have right for 1 bullet in 1 zone in 1 specific time period. Okay. So why? Because it's gonna stop you from over trading. Okay. So always focus on that. Whenever price reaches your order block and you're trading on lower time frames, you only have rights for 1 bullet. So choose your bullet carefully. Okay. You're gonna wait to execute high probability setup on lower time frame. You're gonna see me. I do not trade lower time frames as much, and always when I trade lower time frames, trades are always high probability. Okay, so usually I have good confluence on 1 hour time frame, and then I jump lower, and the lower time frames are really beautiful as well in order for me to execute the trade. But basically, guys, yes, this is how you trade hybrid strategy: 1 hour time frame, 1 minute time frame. You're either executing on 1 hour time frame or 1 minute time frame. If you're executing 1 hour time frame, you can just set your pending order on your order block and trade that. And if you're executing on lower time frame, you need to wait for confirmations. Okay, so you need to wait for more confluence, descending price action, break of structure, and then newly created order block in order to take your trades. You're executing. So as soon as we break this high, you're managing your position on break even, and then you're waiting for 1 hour structure to get broken. Either you're setting your take profit here, or you're managing position with the strategy. And I'm going to explain the trade management, how we manage our trade in the next couple of videos. But yeah, guys, I think that I explained everything very well. For some of you guys, still some things can get a little bit confusing, and that's totally understandable. That's completely okay. You are going to get to know everything after you have watched the whole course. After you start to backtest a little bit, test things for yourselves, everything's gonna be clear for you. So you're just gonna focus on price action, and the candles, and price action is gonna tell you everything. Okay, so I think that's it, guys. Basically, for the first part of the video, I have lost right now the markup. I don't know what was here. I don't know why that happened, but okay, we're gonna go to the next one. So in this example, guys, I have here just the usual hybrid entry. Example of I think this was a this is a reversal entry, and this was a continuation, I think. I'm not 100% sure, but never mind. So this is an example how we're trading. So you're basically in this strategy, you're gonna have reversal entries and you're gonna have continuation entries. So I'm gonna explain to you right now how you're gonna trade reversal entries, guys. So as you guys see in this bit of price action, we have this ascending price action. We all know that ascending price action is indicating weakness to us. We have saw this big wick rejection. Price action is rejecting the highs. We have broken down of this ascending. We had some liquidity to get filled. And why we didn't execute, for example, our trade here? Why we didn't trade here? Because we didn't have enough good breakout, and we had a big wick left behind. But again, wick was respected with this longer ascending. But what was the case? We had one retrace, one break of the low, retrace, second retrace, third retrace. Okay, and this is why we do not consider it. So you only, if you want to trade a hybrid entry, it needs to be like this, that this low is taken only one time only. This is hybrid pattern. And you see that if that happened, we didn't broke any lows after that. So price didn't broke any lows, and this would be valid for us. This would be a hybrid entry. Okay, if price retraced it and broke just for once, just one time, and then give us entry, this would be double confirmation entry. And if price action like here broke three times, one time low, second time, third time, then this is not considered your order block, and you do not care. You have, again guys, fixed rules in place that you always need to follow. Okay, you have back tested those rules, you have tested out for yourself, you made your trade plan, made your checklist, you have everything. You have your fixed rules for the execution, for the trade management. This is going to allow you to not have that much emotions when you trade, to not make decisions by yourself, because strategy is going to make those decisions for you. Basically, it's gonna help you tremendously with emotions and with your trading. This is why I tell you your trading is gonna be much easier when you're trading hybrid. Okay, because basically everything is robotized, everything is systematic. Okay, guys. So as you guys can see, we had this impulse right after it. So we're looking at this order block only as a reaction order block. Okay, so price shows us momentum, broke this structures, everything impulsively, saw this momentum. So again, how we consider this order block as a high probability order block. We had an impulsive break of structure. First, checked, boom. Second thing, we had momentum, boom, checked. We had the impulse, boom, checked. We had the liquidity on the way up, boom, checked. We didn't had weakness at the end, boom, check. We had the corrective pullback, boom, check. Everything was high probability, you know. But again, as you guys can see, price missed this order block. This would be a double confirmation entry. Why? Because we had a one retracing momentum. Okay, price broke the low, retraced, broke the low. So this is considered as double confirmation entry. Okay, and price action is continuing to the upside, and as you guys can see, it didn't tag us in. Okay, basically it didn't tag us in. It was a mistrade on double confirmation entry, and after that price broke again. And this is why when we are trading, we are not, because we are trading price action, we really do not care. We do not want to always see a reaction from the order block. So some traders would miss this trade. Why? Because they would be focused on this order block and they're not gonna trade anything else. Okay, but for us, we do not care about that. Okay, so we do not always need to see a reaction from previous supply or demand. Sometimes you're gonna have a standing price action and you're gonna have a retrace and supply is gonna be here. And you're gonna have this, and you're gonna have impulsive break of structure, momentum. You're gonna have everything is gonna be high probability. You're still gonna take the trade. Here is your entry. Your entry is here. Your high probability entry was formed here. You do not need to wait for a reaction. Okay. So as you guys can see, again, we had this massive momentum to the downside. No retraces in impulse. So as you guys can see, every low was taken by previous low. So there was no retraces in momentum. As you guys can see, then next, this low was not taken before entry. So we had first our entry and then the low was taken. We made a break of structure. So this was a hybrid entry, high probability hybrid entry. Price came back correctively, a little bit regressively. We have this inside bar candle, so we are marking our order block like this. So you're gonna see this was the low, this was the low, this was the low, this was the low. Okay, so this is where we mark our order block, because this was the lowest point from this move. So we're not marking it here or here, we're marking this zone here, because this is where momentum started. This is where we start to break these lows. Okay, so this is our order block, our execution, and you can see massive trade, you know, on GJ. A really beautiful trade. basically reversal in the continuation. It is a reversal trade. Why? Because you had this ascending price action and the breakout, and this is why it is considered as a reversal trade. But again, structure was putting in new lower lows in the market, so we had a bearish trend. So this is some traders will consider it as a continuation as well. Okay, but again, it was a reversal in the overall continuation basically. So yeah, so you do not need to have fixed reaction, guys. You are executing your trades only when the criteria are met. So only if we have this impulsive breakout structure, high probability order block, no retraces in momentum, low not taken. And again, guys, remember, if you're first starting out with the strategy, please do not focus on double confirmation entry. Ignore the double confirmation entry. It will be much easier for you, okay, if you're not trading double confirmation entry. First, start with normal entry, hybrid entry, because again, with hybrid entry, you're gonna build rules, you're gonna build discipline, you're gonna build those things. When you finish with the hybrid entry, when you have done your back testing on all the 6 pairs, and you have finished your ASR, make your trade plan, do everything, then start after doing hybrid entry, then start doing double confirmation entry. Okay, at the end, okay, because this was a strategy refinement, okay, and the initial strategy was only hybrid with the entry, and it is gonna be much easier, I promise you, if you only focus on hybrid entry at the beginning. Just skip double confirmation. It's gonna mess you. It's gonna mess some things up, because all of a sudden a lot of more trades are gonna be valid, and you do not have enough knowledge to know where should you get involved in double confirmation, where should you not. And this is why it should be eliminated, because again, those extra decisions, extra emotions will be eliminated as well. So please, guys, please, if you're starting out with the content, if you're first time in the community, and if you do not have experience and knowledge about hybrid strategy, focus only on hybrid strategy and do not focus on double confirmation entry. Okay, there will be time when you're going to trade double confirmation entry, but again, please first build experience with the hybrid entry and then move on to the double confirmation entry. Okay, it will be really better. So yeah, an example of reversal trade, guys. We can move on. No, this was a continuation. I do not remember what I have done for this part of the video, but okay. So the trade on GJ, a classic continuation, guys. You're gonna see when you're back to GJ, you do not have a lot of trades on GJ, but it's giving you this longer pullbacks. They're really quite nice on GJ, and those kind of entries are really beautiful. Again, another really nice trade right here, guys. And we had this impulse correction impulse, so impulse correction impulse here, right here, and then, oh sorry guys, it was a lag or something. So yeah, continuing with the video, continuation trades, GJ, we had this impulse correction impulse pattern. So basically, when you're trading continuations, you want to see momentum in one direction, then you want to see a retrace, and then you want to see continuation of that momentum, you want to see the impulsive breakout structure, impulse correction impulse. So when you're trading continuations, it's always better to have impulse, first impulse, retrace, second impulse as well. Okay, not only one impulse. So you're gonna have your order block right here, price coming back to the order block, and then boom, continuing to the downside. Perfect example of a continuation trade here on GJ. Again, first thing that you have is impulsive breakout structure. Your order block is high probability, that's checked. Second thing, you have this massive momentum with no retraces in impulse. Again, guys, every low is taken by the previous low. We do not have any retraces, so this is our valid high probability order block. No retraces in impulse, and we didn't break the low. As you guys can see, we didn't break the low, so this was the lowest point before our entry, and this is why our trade is valid. So if price action breaks this low like this is not valid anymore, and you're forgetting about it. And this is why I told you that it's better to focus on a high probability order block and not on a double confirmation entry, because if price action breaks here one time, this is still going to be valid as a double confirmation. It's gonna a little bit mess things up. So this is why at the beginning I really hope that you are gonna only focus on hybrid pattern and then move on to double confirmation. So impulse correction, impulse. We had this impulsive breakout structure, nice momentum, imbalance left behind, no retraces in impulse, liquidity forming before our order block, longer standing price action, high probability trades on high probability trade on DJ, small order block stop loss, a little bit more aggressive approach coming back, but these trades are perfectly working really good on GJ and perfect example of a continuation trade. So basically trading hybrid strategy, you're going to trade reversals and you're going to trade continuations, guys. And this was a example of continuation, and the previous example was example of reversal trade. So right now I'm going to show you what is a double confirmation entry. So just, you know, for showcasing it. And again, if you're just starting out, guys, I would not recommend you to trade double confirmation entry. Why? Because you're gonna see we had this longer standing price action AJ. We all know what JPY likes to do. You know, when there is a standing price action, I really like trading double confirmation entry on AUD JPY more than a hybrid entry itself. But yeah, okay. So you're gonna see that price action was having this impulse. So this was the impulse. As you guys can see, every high was taken by the previous high, get a retrace, and then again every high was taken at the previous high. So up until this point, this was considered as our hybrid hyperbolic order block, but price didn't tag us in, and price broke the high. So again broke the high. So right now this would be not valid anymore for you to trade, because this is not high probability order block anymore. Why? Because price broke the high. Remember, in order for you to trade high probability order block, you need to have momentum with no retraces, impulse, momentum. Sorry, no retraces here. You do not, you cannot see any retraces here. So you're gonna have your order block, and first rule is that this momentum needs to be clean. No retraces in momentum. Second rule is that you cannot break this high. So if price action comes back in your order block, it doesn't have any retraces in this momentum, and it didn't break the high, then this is considered as high probability order block. But if price action breaks this high and comes back to this zone, this is not high probability pattern anymore. This is not valid. And this is why I tell you, it is going to be a lot easier for you at the beginning to focus on, you know, discipline, patience, rules, you know, entry criterias and everything. You're not gonna get confused with double confirmation entry and everything when you're trading only hybrid. So price breaks the high, boom, you do not care. Move on to the next one. You know, doesn't meet my criteria, doesn't meet my entry criteria, my plan, and move on to the next one. I do not care about this one. But what happens when you have a double confirmation entry? This is gonna be still valid, and you're not gonna know, you know, pair characteristics when you're beginning. You're not gonna know what works and what doesn't work, and it's gonna get messy because all of a sudden a lot more entries are gonna be valid, and all of a sudden a lot of entries you can take a lot of entries, and maybe you're gonna overtrade. You know, it can happen. And this is why, again, guys, if you're beginning, focus only on hybrid entry. So you're gonna see that we here didn't have impulsive breakout structure. So it would be better to see that price action broke this, and then we can execute double confirmation entry. No retraces here, we didn't break the high. No retraces here, we didn't break the high. So it is valid double confirmation entry, and it would be better. But again, we didn't have that. We had price action just breaking above with the wick and retracing. And this is our indication that price is breaking the highs, retracing, breaking the highs, retracing. And trading from this is not that good idea, okay? But because we know the pair characteristics of the pair and we have backtested double confirmation entry, AJ likes to do this. AJ likes to go in this ascending price action longer. When you have this longer ascending price action, you're gonna have AJ, you're gonna have this longer standing price action. It's gonna just love to do this. You're gonna have your double confirmation entry here, and price action is gonna do this, and it's gonna boom, continue to the upside. It just loves to do this, Okay, so those traders here are trading the breakouts, breakout retests, supply and demands. Everybody gets taken out, price reacts from this and gets pushed us to the upside. But again, guys, this is advanced level when you know start to backtest all the pairs, get to know the pairs, do the pair characteristics, do naked charting. There's a lot of work in order for you to know everything. So again, this is why it's gonna be easier for you to trade only purely just hybrid entry and not focus on double confirmation entry, because again, double confirmation entry can get messed up because all of a sudden you're gonna have a lot of more trades that are valid and you're gonna get confused, you know, thinking about this and this and this. It's better to have only strict rules in place that you follow. I'm trading only hybrid pattern at the beginning and that's it, you know. So only this one high gets taken. This is not in my rule, this is not my trade plan, I skipped it. It's gonna be really better for you at the beginning again. So again, a reversal trade, guys, right here. As you guys can see, price was moving in this ascending, indicating weakness in the market, so indicating that price doesn't have enough momentum to continue to the upside. So we had this massive push to the upside. So you're gonna see that this push, again, we didn't had any retraces in momentum. So every high is taken by the previous high and we made a wick. So we didn't break this high again. We didn't break it with this. We just range. And this is when first time when we broke it. And you're gonna see that in this momentum also as well, we didn't broke any highs. So this is considered as impulse, correction, impulse. And you had your order block right here, your first order block, hybrid probability, hybrid pattern would be here, and your double formation would be here. Okay, and this would be aggressive to take. This is why, because again, this is valid. No retraces in momentum, we didn't break the high. No retraces in momentum, we didn't break the high. So our rules are met. Everything is in place in order for us to take the trade. So why we do not trade and why have we implemented hybrid probability double confirmation entry is because this trade was aggressive. You see that price action was coming back to this order block pretty aggressively, and this is why we refined the strategy and we started to trade based on double confirmation order block as well. But again, if price action was showing us a retrace here, if we had a retrace, this would not be valid. If we had a retrace here, this would not be valid. If price action broke the high, this would not be valid. If price action broke the high here, this would not be valid. So we still have a lot of rules in place, and still we are allowing ourselves to trade based on probabilities and to have strict rules in place that we always are going to follow. But again, it's gonna be a little bit harder for you if you're not experienced enough. But this is why we implemented the double confirmation entry, because you can save yourself basically from taking a lot of stop losses. Because right now you're not gonna trade based on hybrid entry, you're gonna trade based on double confirmation entry, more safer entry. You're gonna see that first entry was also, you know, profitable, boom, and this was basically a scaling entry, but I only marked this scaling because it is a little bit safer. Why? Because we had a reaction, as you guys can see, price made this impulse downsides, made a reaction, break of the lows, retrace, breaking the lows, retrace, breaking the lows, retrace. So this was a smaller descending. So you're gonna have your supply, your demand zone right here. You had this massive impulse downside, and then price action slowing down. You had this breakout structure, and again double confirmation entry, guys. Why is double confirmation entry? Because we had this impulse, then retrace, and then again impulse. We broke this high once, we broke this high once. No retraces in this momentum, no retraces in this momentum. This is a valid double confirmation entry and price action just going boom. Okay, so again, you're gonna have supplies, demand zone here, price looking and moving like this, breakout, this is basically it, and you're gonna have like something like this. You're gonna have newly created order block, price action breaking this momentum clean, one retrace, didn't break the high multiple times, boom, again break the structure, no retraces, didn't break the high multiple times, then price action continuing and then moving on. So yeah, this is also example of a reversal trade, and I think that's pretty much it, guys. I do not know what was here. I have prepared something for you, but I think we did that everything. We did double confirmation entry as a reversal, we did double confirmation entry as a continuation, we have done hybrid entry as a continuation, and we have done hybrid entry as a reversal. So we have everything, and I have shown you examples. So I think this was an extra tab that should not supposed to be here. Yeah, there was nothing here, so it's good. I didn't forget anything. But basically that's it, guys. So I really do hope that at the end of the video, this video, you do not, you're not like tired or anything, confused or anything like that. I really do hope that. But if you are, I assure you that's completely normal. Okay, so there is nothing to worry about. This is completely normal. I've spoken with a lot of students, and believe me, all of them were going through the same thing as you are going right now. So it's completely normal. Okay, to get a little bit confused and not get certain things, etc. Practice makes perfect. So you're gonna do all the videos in the course, you're gonna finish all the education. Again, guys, after every video, go and test things out on the charts. Okay, compare my things that I have shown you today and just do them on the charts with the repetition. Believe me, you're gonna get it in no time. Ask questions in the community, talk to other traders. I have traders that are in the community for 7-8 months. All of those traders were at your place right now, all of them. Okay, so nothing to worry about. Everything is just gonna click, and you're gonna see that trading this way is going to be just better for you, because again, you're gonna eliminate that factor of luck from your trading. You're gonna eliminate all of those noise, all those different order blocks, all those confluences, all those multiple time frames, and you're solely gonna focus on probabilities, and you are going to, most important thing, going to be able to backtest the system, and you're gonna see that system is profitable. It's gonna build confidence in you guys. Okay, and you're gonna do your journal, you're gonna do your ASR, make your trade plan, you're gonna do loads and loads of work, and that's why you're gonna get to know everything. So again, the first thing that is important right now is to build a routine. Okay, it's the single most important thing that you need to do as a trader. So you cannot, expect to make banks and be consistent, taking profits in the market if you're not consistent with your work. It's total BS. Okay, so you need to have a routine. So every day a little bit. Watch the videos, test it. Watch the video, test it. If anything is not clear to you, just ask in the community. Shoot us a message. Message me privately or ask in the community. Some of the admins, me, myself, or other members are gonna help you out. So we are here to help you guys out, to speed your process, and to boost your performance and your progress. So again, guys, if anything is not clear to you, just DM me privately or shoot us a message in community, and we are going to make sure to help you out. So yeah, that's pretty much it in this video. Hope you guys enjoyed it, hope you liked it, and I'm gonna see you in the next one.